All right. Good morning, everybody. I got that. All right. So, how's everybody today? Happy Tuesday morning, 6:30 a.m. where I'm located. March 16th. We're already halfway through the month. Through the month, guys. Time flies. It gets quicker and quicker the older we get. That's cliche. Let me get my chart up. I got quite the busy day today, guys. I'm going to do a 1 hour session today because I have to hop off in an hour to prep for my onboarding. I have onboarding for my new position. Wasn't it 17th? Yeah. Did I say something else? Yeah, March 17th. But anyway, yeah, I got an onboarding. I got an hour-long onboarding here in an hour and a half. And then I have my stream on A1 Trading. And then I have another onboarding meeting with the managers of the news desk. So looking forward to that. Guys, the company is called FX Empire. I'm not sure if you guys have heard of them or not. They are one of the larger news sources, financial news sources online. Yeah, they're all over the place. So if you guys have heard of FX Empire, that will be the company I'll be working with. And again, producing content. So it sounds like we're going to look at some projects as far as shorts and short form videos, long form videos, possible live streams in the future with them. Yes, I'll still be streaming with A1. Yeah, Zambezi. That was one of the things I made clear during my interview process was that was a project that I wanted to stick with. And so they said that shouldn't be a problem. There's no like conflicts of interest or anything of that nature. I'm not selling anything. At the end of the day, all I'm doing is just sharing market analysis and streaming. So yeah, as far as all the communications I've had, yeah, I should still be able to do this stream for my own personal channel and then cross over to Trader Nick's stream for my 30-minute segment. And then it's basically a 6-hour day is the way it's framed with FX Empire. So that'll be a 6-hour, it's 6 hours, but the reality is when it comes to this industry, we kind of work a lot, it's not like it's only going to be 6 hours. I mean, basically I'll be doing my content creation and probably writing up some news articles and such, but I got plenty of time throughout the day to do it all. Right. So this is my favorite way to start the day, streaming with you guys and then crossing over to Nick's group. So yeah, it'll basically be doing 3 different projects in one. Sounds like a lot, but again, it's really, they kind of scheduled it for 6 hours for the day. So that leaves me with a whole bunch of hours throughout the rest of the day to do my stream and Nick's stream. So yeah, should be a good, fun, packed day. But at the end of the day, even during my unemployment period, this is all I've been doing anyway, streaming and creating content, shorts videos, long form videos on the weekends. So it's almost like it's not even changed. Nothing's really changing. It's just that I'll be adding a few more video recordings. But they have an editing team, and I think I'll be editing my stuff. I don't know. That's part of what the onboarding is going to explain. Hey, am I going to do like the bulk of my editing, or am I just going to make the raw video, send it into the editing team, to polish and make as the final product for the website, for the YouTube page, YouTube page, that kind of thing. So I'm not quite sure, but I'll learn all that today, I think. But yeah, exciting stuff. Really happy. So having said that, I was just looking at some notes that I came up with here. What kind of happened over the Asia market, the early part of the London market over here. So as far as like the overall tone, still kind of risk off vibe going on overnight. Fresh Iran war headlines. Let's see here. Oil climbed back a bit after a brief pullback, while equities were mostly softer and safe havens mixed. So geopolitics. So this is Iran war day 18. It looks like there was a new tanker that got hit at the UAE port, which is the southern end of the Strait of Hormuz, by a projectile overnight. When I say overnight, I mean overnight here in the States, guys. Again, it's 6:30 my time, which was the first strike in that area in 5 days. So Iran did they're continuing to, effectively paralyze the traffic through the strait. They do have some fresh warnings coming out that says that it cannot be the same as before. So that's a little ominous. Zinni, you're curious about pound dollar? Yeah, let's go have a look at it here in a second. Pretty curious how's GU going to flow. Yeah, I mean, GU is still quite the bearish asset. It really is. I know that I had my win on pound dollar last week. I think Trader Nick has traded it twice for profit. So it's a pretty popular short right now. What's going on, Muchir Kelvin? How you doing, buddy? So yeah, let me just finish up on these notes over here real quick. Yeah, President Trump was quite critical yesterday of the allies for not stepping up to reopen the strait. I don't know if you guys happened to see his conference that he had yesterday. It was a little bit of a somber one because his chief of staff, is that right? Chief of staff? Yeah, chief of staff, I guess, was diagnosed with cancer. And that came out yesterday. So that's basically Trump's right-hand person. But she says that she's going to be, this is Susie Wiles we're talking about, the chief of staff. It sounds like she'll be working remotely. So she'll still be working. She'll just be doing it remotely while she's going through all of her treatments and stuff. So that was a little bit of a shocker that came out yesterday, just politics aside. Let's see what else we got here. Brent and WTI climbed over 2 to 3%. Let's see, equities. There's the Nikkei. Forex majors, dollar held firm as the safe haven inflation play. Most of the risk currencies traded on the back foot against the dollar. That makes sense. And though the moves were relatively contained ahead of the week's big data and central bank events. So yeah, let's go look at the calendar. Yeah, NASDAQ's got a bullish reading, exactly. It's kind of the outcast because the Dow has a bearish reading. And then S&P is kind of in the middle and neutral. So, when we get the indices not going in the same direction like that, I don't know. It's just it's a little bit sketchy trying to pick a side. But, one thing I like to look at when it comes to that is the put to call ratio. And when I was looking at the NASDAQ, I do believe that it was kind of going against the edge finder reading. So S&P right there, that's neutral, but it's giving us a high put volume. So let's go look at NASDAQ though. Yeah, see, this was the issue I was looking at for NASDAQ. I mean, we've got a high call volume, which means a lot of bullish bets in the options market. So the contrarian signal to that would be to sell. But the challenge is we got it as a bullish score. So, it's just not lining up. I like to get, if this would have been giving us a high put volume signal, meaning the options market is selling it, that would have been a better contrarian signal to buy it, to follow what the top setups is showing us over here, giving us a +5. So, yeah, it's just not quite matching up. I mean, it's on my watch list, but it's just, it's not as exciting to be buying when the market is buying as well, because we don't have the benefit of having their stop losses, down below within the zones that I like to trade, that we like to trade. So yeah, it's just a little, it's just not quite matching up. It's kind of a bummer. But yeah, pound dollar -8, like you mentioned over there. Let's go have a look at it. I don't think I've looked at it yet this morning. Okay. So okay. So yeah, never mind. I actually did look at this just a minute ago. So pound dollar bounced into this 4-hour supply zone area that I was looking at yesterday. And while it did hit the 1-hour confluence, and you can pretty much see that's where it kind of got to push back down. I really was waiting for the 2-hour confluence, which is up here. So if I go to my 2-hour chart, you guys see this is where I got my gap on a 2-hour time frame. This candle here, because that's where the 2-hour gap was created. Now, normally I would have just went the 4-hour, 1-hour route, which of course was down here. But I like how the 2-hour was kind of, it was up a little higher. So it was giving us a little bit better of a reward to risk ratio. So as you can see, that first jump into the zone, it missed it. So it pulls away. And this is where we think, oh, dang, we missed our trade opportunity. But for me, I've got my alert set, and I had it there the whole time at the 133.5 level, because that's where the 2-hour zone starts. You're short since yesterday. Yeah, it's not a bad trade. I mean, I was close to pulling the trigger on the 1-hour. On the bounce into the 1-hour candle here. I was really close to it. But one thing I just didn't really like when price started leaving the zone, I just didn't like how small the candles were. See how small the candles were, just like going down the steps, like a stair step, relative to the big expanded range candle we had that came into the zone. So that was one thing, the small size of the candles leaving. But the other thing was I didn't like the volume at all. The VSA candles down here, I mean, that's below average activity. That's below average trading activity. So to me, when I saw that, when I started seeing that, to me, it just did not look like an institution trying to fulfill their order, right? If they did, they put in just the tiniest of amounts. So that was the thing that kept me out of it, was mainly those two things, the small candles and then the lack of volume. So yeah, price is dropping, and I'm thinking, well, yeah, there was a trade opportunity missed. But that was just for that hour, for that 1-hour time frame. I'm waiting up here. And we're not too far away from it, actually. Right? Again, I'm just waiting on that white dash line right there. Again, that's 133. What is that? What I say it was 133.5. So might have an opportunity this morning. Now, when price enters this zone, then I'm going to look, and I want to see what happens when price, I want to see what happens with the volume. And not only that, the most important driver to this is the fact that if we get up to here to the 2-hour zone, well, now we're going to pass through our 200 EMA, which is one of my personal rules. So that's the other reason I stayed out of this short over here, because on a 1-hour chart, we hadn't even touched the 200 EMA. 200 EMAs are quite popular, guys. Institutions and hedge funds will use that one as well. I'm not sure not every one of them do, but there's enough that follow that it's worth watching. So yeah, I mean, that's gonna, and then the last piece to that is, for me, I want to make sure my RSI jumps up to the 80 level. Now, see, RSI jumped up to 80 over here, so it met the rule there. But the problem was we just hadn't touched the 200 EMA yet. So yeah, that's what I'm looking for. I just want to see, I want to see us pierce the 200 EMA, touch the 2-hour zone, and then get a 1-hour bearish candle. And I want to really start to see some volume picking up when it does that. Because if it does that, then I'd be interested in a short, personally. Conventional technical analysis says, take profit at the swing low, but I would be a little a little worried, or not worried, but just mindful of this demand zone that's creating itself down here. Right? Got to keep an eye on those zones. Whether you guys trade those zones or not, like I do, you still want to know about them, because that's where price could potentially bounce and take away all our unrealized profits, right? Um, and also, yet another reason I avoided this trade was because we had bounced into this confluence down here, demand zone confluence from way back here. Okay. Remember, we had this demand zone confluence all the way back here from December 2nd. Now, structurally, it looks awesome. But the reality is, even back then, we didn't have a ton of trading volume that happened during those candles. So, yeah, but when we're looking at a high time frame like this, there's no denying how strong of a move up that was, with how many green candles we had, broke this double top structure over here back in the past. So, even if I wait for that 2-hour bounce, the 200 EMA, and then the bearish candle, it's still a little sketchy because it bounced off these zones. I really wish that we had not touched down here yet, but we did. That's the reality. There's no taking that. There's no going back from that. Now, another saving grace, even though it hit the zone structure down here, is the fact that if we look again at the volume, there really wasn't that much volume. I mean, this is the end of Friday's trading session, this past Friday. But yeah, if you look at the bottom, it's very low volume. Now, it's the end of the trading day on a Friday, so that makes sense. But that's the other reason I'm really okay with taking a stab up here, because yeah, even though it did hit that zone confluence, it was the end of Friday session when all the hedge funds and Wall Street, they're sitting back counting their money. They're probably taking a few shots in the office. They're getting ready for their Friday night parties. So they're probably not doing a whole lot of trading down here, right? So that makes it a little more, that makes it a lot easier actually to stomach taking a chance at a short up here. So yeah, I'm glad I personally, avoided taking that short here. But up here, there's no denying that we'll have more odds enhancers in our favor to short. So that will definitely be one of my favorite potential setups today. Just need a little bit more of a push up, touch the 200, touch the 2-hour zone, proximal line of that supply zone, and we'll look for a short today, possibly. So that's pound dollar. And what else we got up here? Stops are 133.85 for you. Yeah, that's a good one, because now you're taking into account this whole 4-hour zone. Yeah, you're up in this area here. Yeah, no, that's great. That's a great supply zone. I'm sorry, that's a great stop loss. Great stop loss. All right, what else we got? Hoping 134.5. Yeah. Yep, that's where I'm at. Dixie is dropping. Let's go look at Dixie. Yeah, looks like it's rising to me. Yeah, it's definitely pulling back a little bit. We do have a 4-hour zone down here, so I would like the pound dollar to. Okay. So what I would like to see is price on the dollar actually drop down to this demand. At the same time, the pound dollar bounces into that 2-hour supply zone we just looked at. That's what I would like to see, because then we'd have the yet another odds enhancer on our hands. Hey, the Dixie is dropping into a demand. I like it. I love that. I think that would be awesome. That'd be a really good odds enhancer. Same thing over here would be piercing the 200 on the Dixie, the 200 EMA, right? Pierce the 200 EMA, bounce into the zone of demand, and you see a dashed line right there, blue dashed line. That means that's a former support or resistance line. Okay, in this case, resistance. So there's a lot of really good reasons to like pound dollar this morning or this afternoon, whenever it bounces. lot of potential odds enhancers potentially playing into our favor. And if you're already in the trade, so it could very easily miss the zone I'm after and just completely fall. But this is definitely going to help, whether we're in the trade or not yet. Right? Just bouncing down into this demand. So that's good stuff. Good stuff. Okay. Looking good. Let's see here. What else did we want to look at? Gold pulled back modestly on stronger dollar pressure while silver followed suit, but remains supported by ongoing geopolitical uncertainty. Let's go have a look at gold and silver while we're at it, which are obviously neutral scores. Now they're both gold and silver are both. Let's see, silver's a -3, gold is a -2. So if anything, they're short right now, but it's kind of hard to look at it in that aspect, considering the fact that they thrive on chaos. And what do we have? We have chaos right now with the war. Now, it sounds like some stuff is starting to move around in a good way. There's a lot of chatter starting to come up about the possible ending to the war sooner than later. But at this point, it's, that's just speculation. It's not anything in stone yet. The reality is we still got bombs dropping. And like I just mentioned, that tanker that just got hit in the UAE port. Okay, that was the first one they had in 5 days in that specific area. So, yeah, I ain't trying to sell gold and silver on something like that, even though it is giving us a minus. Again, it's a -2 and a -3. So if I just go over here to my neutral items, there you go. There's silver at -3 and there's gold at -2. Yeah, like I said. So there's no way I would even think about looking at that in the terms of selling or buying. It's really in no man's land. I mean, obviously we're getting neutral scores, but it's just, yeah, it's no man's land. Gold, silver have got no interest. Now, if you're looking at the technical side of things, yeah, it's just too choppy. That's just the reality. If we look over here, this is gold. This is our daily chart on the right, and I've got my master pattern boxes turned on. So what are we at? We're in that consolidation zone. It's a holding pattern. Now we're trying to peek out the bottom, but even if we peek out the bottom, got a couple zones waiting on us. You get this demand over here, which I don't think is strong at all because it didn't even break a structure. Not immediately, anyway. See, when I look for a zone, guys, I want it to break a structure, not eventually, but I want it to break it now. So yeah, we left this area, but then we got lazy and sideways. I would have wanted to see this zone, this swing high, this swing high. I would have wanted to see at least 3 or 4 green candles come out of that for me to be interested at all. But all we had was the one leg out, one other leg up, and then sideways. So that's in fact, that's so much of a turnoff. I'm going to turn it light green, just telling me that it's sketchy. Turn off my space heater. Hey, right, Zenny? I'm telling you, EdgeFinder solves a lot of problems. Oh, I was the same. I mean, I've been trading since 2014. That was when I took my classes, and we were taught fundamental analysis and the economic calendar. But that's just one side of it that just kind of went away early on, because what's sexier? The charts. What's the most boring part? The reports, the news, right? But a chart it's fun to look at. There's a lot of colors. There's a lot of things that make us look smart, especially to our friends, right? That have no idea what the hell trading is. Not that that's just the reality. I mean, when you get on YouTube, that's all people talk about is the charts and moving averages and indicators and oscillators. But they don't even know. Almost all of them have no clue how the stuff works or operates. And they don't know what makes markets move at the end of the day. It's not an indicator. Bouncing off of a trend line that's not what moves markets. That's just what shows where the liquidity's at so the banks can take advantage of it with the confirmation of knowing, of having their finger on the pulse of the real market, which is the reactions of economic events, and especially in today's day and age, geopolitics. So no, that's awesome. Yeah. Yeah, Edge Finder does, man. It solves a lot of problems and it saves so much time. For me, the biggest benefit behind the Edge Finder is the time it saves us because I used to do a lot of this stuff. I mean, I used to go and look through all the PMIs and the CPIs and the three-letter acronyms, but this saves at least 2 hours every single morning from not having to go to the economic calendar and sift and sort everything, per currency, like I used to do, like whatever, the dollar, sift and sort, go pull out a monthly chart. See, this is what I used to do. I used to just go on here and go to each individual currency and have a look at all the recent red folder events. Let's get rid of the yellows, by month, and just start looking up and down and seeing how many greens did I have? How many reds did I have? Okay, I used to do some of the Edge Finder work, not near as intricate as the Edge Finder presents it to us, but it would just take a lot of time to go through and look at this month, look at last month, get an idea of where everything's leaning, and go from there. But yeah, that's the biggest thing is just how it saves us time, man, gives us our life back, and it makes it less boring too, guys. Think about it. Looking at reports, what's the one things we hated in school? Book reports. I hated book reports and going and researching. Of course, back then we had to do it in a book. These things called books, right? At least for me, we didn't have. I graduated high school in 2000, so we got our first computer in our school during my high school years. So, like, I guess it might have been my freshman or sophomore year. I can't remember, but that's when we got our first computers. See, prior to that, it was all books. We had to open up a dusty book and research. Damn, I just dated myself, didn't I? But anyway, yeah, this just solves a lot of problems. But the biggest benefit is all the time it saves us so that we can focus on what really matters, which is deciphering the meaning of that trifecta trio of analysis: the fundamentals, the sentiment, and the least important thing is the charts, the technicals. So all that does is times our trades for us. Let's have a look at some of my alerts. Yeah, guys, call out anything else if you have any other alerts or any other assets you want me to look at. We'll take a quick look at a couple of these alerts in the meantime. Yeah, when it comes to oil, okay, we did actually bounce into a zone yesterday. I was watching, but the thing I disliked about the fact we bounced into this zone, the thing I disliked is we had already bounced into this overhead supply from back over here, this 1 hour supply. And when we did that, that just like that took the wind out of my sails for my interest anyway, as far as looking at this zone right here. If I go to a 2 hour, that's really where I got this zone idea. Let's get rid of that. So I was looking at this 2 hour demand right here. Okay. That was the one I was looking at. But again, it bounced into our zone first, our supply zone first. And it's too close. There really was no reward risk worth the crap as far as trading. And again, that's a 1 hour supply. So if we go all the way back here, we'll look at it. Right. So this is what it had bounced into. It bounced into this candle. It had a really nice, strong drop. It did leave a gap. So that was a spot in time where supply heavily exceeded demand because it got us pushed down. And it was confirmed, guys. This is the important part. It was confirmed by the expanded range candles on the volume spread analysis. See, this candle was yellow. So this and this candles was yellow, and this was a green candle, but it was still highly, still a lot of activity. So when I saw that told me that I didn't really want to fight this supply zone. unless we broke through it, and we haven't broken through it. So since we didn't break through it, yeah, we came back down, bounced into the demand, but it's just not exciting to me. Now, this is a 2-hour demand, and this is only a 1-hour supply, but there was a lot of activity within that 1 hour because of the volume spread analysis. Okay. It's another thing that'll solve a lot of problems as volume spread analysis, since we don't have the centralized volume in currencies in Forex. This is our cheat sheet, our way around it, playing the system. So I'm basically just not, I'm staying out of oil for now. Ultimately, if I were to get interested in oil again, I would really like to see price just go through the rest of this supply and close up here somewhere. I mean, if we're looking out a few more days, let's break this structure and close. And if we close up there, then I'll be more interested in a demand zone somewhere in here. But and with the intentions of trying to hold that trade up until we get to this overhead supply up here. I do believe that's a 2-hour. Yeah, 2-hour supply, right? So just in a wait and hold. I mean, it's been sideways for the last 3 or 4 days, with the exception of this temporary push through that got smacked down by the supply zone. So I just don't see any plays right now on oil. I really don't. And if I don't see it on a 4-hour or a 1-hour time frame, then last thing I want to do is go down to a 15-minute or a 5-minute, because that's just chop city as far as I'm concerned. I mean, that right there looks like a really nice 10-minute demand zone. But again, it's just a higher context or a higher time frame is just sideways, choppy. Price did bounce into that demand, as you can see, and it is getting a push up to the supply. But yeah, this just isn't enough. For me, for my taste, it's just not presenting much of a reward compared to the risk. All right. What else you guys looking at? Let me know if you guys are seeing anything. Okay, pound dollar. So we've already looked at that, and I've already got my alert. Okay, perfect. I'm actually keeping an eye on a couple stocks as well. I know this is not really a stocks channel, but you guys remember there is the stock box that's available to us that has its own top setups. If you trade stocks, okay, the readings are a little different because it's obviously tailored towards stocks. It's got its own set of financial readings that pretty much, would be the equivalents of the fundamental analysis in the currencies and everything. You got the same sentiment type analysis, and you got the same technical type readings. They're just different. They're just different items, different odds enhancers that they cover, that they look at. I only have 25 stocks, 27 or 25 or 28, something like that, on my challenge account. So the cool thing is we can go in here and select all the specific stocks that you want to look at, because he's got like 100. I don't know. It's like 150 or 200 stocks on here, but you can go on here and just build your own watch list of whatever stuff that you want to keep an eye on. So it's pretty cool, guys. That's the stock box for you. Now today is a nothing but a yellow folder day. Yellow. And let's see, let's go back. I gotta fix my settings here. Yeah, nothing but a yellow folder day, except we do have US dollar pending home sales. That's it. There. Pending home sales. Okay, orange folder event. That's the only item we've got. Other than that, let's see. Okay, so the PPI on the Swiss franc up here, that will affect the Swiss franc as the individual currency, which we've already had. So let's go over here to the macro scanners and look at the heat maps. Swiss franc. Okay, so there's our PPI report that we just had this morning, and it's not quite updated yet. It is quite early there in Atlanta where they have everything set up. So let's look here. PPI month over month. So we missed our reading of zeros over here. Got a minus 0.3. So yeah, it's just not updated yet. They'll have to get this updated when they come in. But the previous report was bearish as well. So the Swiss franc's going to stay the same as far as I can tell, 33%. It is still the second weakest currency as an individual right now. If we look at our overall surprise index, yeah, nothing's changed. Nothing's changed in the last couple of weeks. I mean, the Aussie remains the strongest. You got the euro and the buck right behind it, a distant second and third. And then, yeah, as far as the weakest, still got the pound hanging out in the basement. And the Swiss franc is on the second to last step down into the basement with the pound. So, and this is mainly the fundamental side. Keep that in mind, guys. Now, to me, to a lot of us, the fundamentals are the most important. So this is my favorite. This is my second favorite page on the Edge Finder, but behind the top setups, right? Second favorite page. I want to see how strong or weak the currencies are, or if they're neutral, like the yen. Yen's a straight up 50%, right? I want to know these things. It's important to know these things. Let me see here. Nose stitches. Okay. And let's see what else. Oh, and something I noticed yesterday or today is how much bearishness there is in the AAII investor survey, the sentiment survey that happens every week. They basically ask a group of traders just a simple question. Hey, where do you see the markets going over the next 6 months? Bullish, bearish, or neutral? And it's at the most bearish point it's been in a long time. The average, the 46% feel that the markets are going down, which is quite understandable. Quite understandable considering you got the introduction of war into the formula. But remember, just when everybody thinks the markets are going to zero, what typically happens? At some point, prices go the opposite way. And then what happens when people get too euphoric? And this blue is the bigger bar, right? That's where prices are probably going to start looking to go down, go the opposite way. So right now the market is scared, and rightfully so. We've got geopolitical madness going on. Okay. So if everybody thinks that we're going to zero, what's a good, this is where it's a good idea to start looking to take markets the other way, getting items cheap. So yeah, looking at that NASDAQ that we were talking about earlier, it's a good idea to start paying attention to the top setups. But again, we've got some other things that are just kind of gnawing and nagging at us, like the put to call ratio, not really giving us a bullish signal. But NASDAQ, keep in mind, it was the top item on the COT report. Let's go look at the COT report real quick. NASDAQ, remember, was bought up the most. There you go, very top. Okay. They increased by 8.3% on their net long. Okay, they bought 1,289 contracts, which is a bullish signal by itself. But then they also sold off or got rid of or bought to cover 21,000 contracts of shorts. So very bullish. I mean, 8.74%. And we were basically 50-50 over here on the overall net long, net short. But then when they got a boost, again, a boost of 8 3/4, so that put it at 59%. So now it's, it's a lot better in the long bias than it was the previous week, NASDAQ, because it was just a coin flip, remember, last week. But again, we've added 8.74%. So if the banks are starting to add, even though we got war and geopolitical madness, craziness, right? This is stuff we want to pay attention to, because now the banks aren't always right. It's the hedge funds. Not every hedge fund's perfect. You know, they lose too. They lose like we do. And they're looking at taking markets generally the same place we're taking them to. They just have to go at it a little bit different way. Okay, this is their way of potentially accumulating those early positions to start getting their big tugboat, turned around the opposite end. Okay, tomorrow, what have we got? Tomorrow, guys, we have the Fed meeting. So this will be 1 p.m. my time, so 2 o'clock New York time, guys. 2 o'clock p.m. Eastern Standard Time, New York City time, Trader Nick time, because he's on Eastern Standard Time as well. Okay, projected to remain the same. In fact, guys, as of yesterday when I looked, or 2 days ago, we were only pricing in one price cut for the year, and that's after the turn of the beginning, end of last year. We were talking about 2 rate cuts, but now we're down to 1. Let's go look at our CME tool, and you guys will see what I see. And guys, this is cmegroup.com. If you ever want to take a look at what the markets are pricing in as far as the rate cuts, I know probably most of you probably know that, but just in case, cmegroup.com. Save it as a favorite. You can reference it anytime. But yeah, we're a lot, guys. 99.1% will remain at a 375 as a high. But if we take a look at all the dates up here, and you'll see every one of them remain at that 375, 375, 375. Okay, it gets a little closer right there in September. October, look at that. Look how close we are. We're only a 1.1% away, but still favoring the 375 until we get to December. And that's where we finally have a higher percentage in the 25 basis point cut column. Now, I got to say, though, the October one, this was not near this close the other day. Okay, this bar over here was a pretty decent amount bigger than this bar over here on the left, favoring the 25-point cut. So, yeah, we're narrowing the gap. Hell, this might change. And this is a very dynamic bar graph. I mean, you can hit refresh on this thing, and oftentimes it'll change right in front of you. Okay. It's way too far out. Yeah. So anyway, just pricing in the 1 for now. So we shouldn't be seeing too much of a surprise on tomorrow. Okay, it's not about the number, because we already know what the number is going to be. It's just about what comes out of the Fed chair's mouth, which, by the way, is, I guess, on his way out. Is this his last? Oh, wait, no. Is this his first? Is this Kevin Warsh's first statement? I don't remember the exact date. Yeah, I can't remember the exact date of Kevin Warsh. But either way, doesn't matter at the moment. But hey, look, we've also got the Bank of Canada. They're going to have their presser because they've got their rate statement as well. Now theirs is at theirs is at 9:45 Eastern Standard Time. So they're projecting the same. They're projecting to keep theirs the same rate as well. So yeah, we should have a couple numbers come out. Okay, we got Aussie dollar. Okay, Reserve Bank of Australia. Theirs is coming out in the evening. So 3 rates. They like to do that. Or do we have 4? No, we do have 4. That's right. I guess Japan's is technically on the same day as well. So 4 rates, guys. 4 rate decisions. And every single one of them are projected to remain the same. So what's going to happen for me come in Thursday? So the first thing I'm going to do Thursday morning is take a readout of all their pressers just to get an idea of, hey, does it sound hawkish? Does it sound dovish? And when we come in Thursday, I'll try to have that for you guys, and we could take a look at those. We could take a look at those rate statements. I like to run them through Grok and just tell Grok, hey, summarize this lip flapping session into a half-page summary. Just give me the basics. Give me the most important highlights. And it's super awesome to have that tool. It's a lot quicker to, get through the important parts of the press conferences. I think you can even ask it, hey, what color tie are they wearing? For those of you guys that want to know what color tie they're wearing. So anyway, really cool stuff. But yeah, Tuesday rather. Not a whole lot going on. Last night, again, we had Aussie's rate statement come out. So let's have a look at a couple of these Aussie pairs because that came out. Yeah, that came out at 10:30 my time. I just wanted to take a look at a couple of these. So let's do this. Aussie dollar is on our bullish list. I do know that. Yeah, +5. So yeah, there was a couple zones I was keeping an eye on a couple of these Aussie pairs, but the problem was, yeah. So like here we go. There was a 15-minute zone I was watching on Aussie dollar, but right here is where Australia's rate decision came out. So it was just too close for comfort, guys. As much as I might like a zone, remember, whenever a rate statement, when a rate statement comes out or rate statement comes out or non-farm payroll, I ain't trying to get in the middle of all that. Not at all. But even so, what did it do? It came down to that demand zone I was watching. And when you include the stop loss somewhere down in this area, it turned out to be a decent, pretty decent looking trade. But I wasn't trying to get into that. Not all that volatility. No thanks. Because you just never know. You just never know. You never know when that might say 4.1%, but then it come out 3.85 or 4.35, right? You just never know. So stayed out of it. But now that the volatility is all kind of calmed down, then yeah, I'm ready to start looking at some more of these Aussie pairs because nothing's changed in the last, 2.5 weeks. Basically, all the Aussie pairs remain up here. Aussie Swiss, Aussie Kiwi. I'll just take a look at a couple of these. I've got 10 minutes left before I got to get up out of here, get ready for my onboarding. Aussie Kiwi. So I am keeping an eye on a couple of these zones over here. I got a 30-minute demand right here. And then if I come down to a 10-minute, I think it was, yeah. If we come down to a 10-minute time frame, got a 10-minute zone down here. Now, probably just look at this as a zone on top of a zone. So basically, I would probably just look to include this whole thing as one big zone like this. Okay. But I'm just keeping it broken down into the two zones just so I can distinctly see them. Now, if I had my choice on zones, then I would obviously want to go for the zone that's closest to the origin of the overall strong move up. And that's obviously down here, the swing low. Oh, my nose won't stop itching. Somebody's thinking about me. Isn't that the saying? When your nose itches, that means somebody's thinking about you. I hope so. But yeah, I do like this Aussie Kiwi. I really do. I mean, yeah, so basically it would be a return to the post Reserve Bank of Australia release price action. But what I like about it, even though it's in the Asian markets, okay, I don't normally like trading a lot of zones that are created in the Asian market just because they just typically don't have a lot of volatility. I mean, Wall Street's asleep or closed or off getting drunk, right? And the markets around the world just aren't as big. I mean, you just don't get as much volatility in the Asian markets. So But if it's a zone created with volatility from a bank statement, a rate statement, absolutely. Look at our VSA candles down here. Okay. It's a lot of activity. So yeah, absolutely. I want to keep my eye on it. Now you see I've got my alert set up here. So it's on the top, it's on the upper zone, but yeah, I would prefer to wait. So if price comes down and touches my alert and screams at me, I'll probably just turn around and set another alert. But first thing I want to do when it hits that upper zone is, hey, am I getting a bullish engulfing candle? Am I getting a bullish candle with a wick underneath? Does it have volume starting to creep in? If it does that, I might just take the top zone. But at the end of the day, whether I take the middle, the top zone or the bottom zone, I'll still put a stop loss below the lows down here because we got a bit of a double bottom, maybe triple bottom, however you want to look at that, quadruple bottom. We got clear support, clear support right there, right? It's about as clear as support gets. So I don't know. I mean, it depends on how conservative or aggressive you want to be, but the ultra conservative stop loss is below the whole structure on this thing. Or you could just go below the zone. Obviously, the most aggressive is put your stop below the upper demand, but I think that's just way too aggressive. Incorporate the whole structure over here is what I would want to do, and then just take my rising, because as long as we have an uptrend like we have over here, we know we're going to get a bullish candle for the day because all the other daily candles have been bullish on average. 8 is above our 21 EMA, higher highs, higher lows. The second strongest currency pair, very bullish. So I would expect a higher high. That's the way to look at this stuff. So my chances with, a conservative stop loss with the understanding that, hey, prices come down, whether it hits this zone or this zone, doesn't matter. I would expect price to come up to this area because look what we have up here. We have a former resistance point. Let's have a look at this here in a second. See, I would look to sell out of my position or at least target this area, because what if we got to the left? Talking about this upper blue dash line. I don't know how far to the left we have to go, but let's just go have a look. Here we go. Is that it? Yeah, it is it. Yeah. No, that's not it. Hold on a second. Where am I at? Here, let's go to a daily. Well, good grief. How far back we got to go? It's not that one. It's going to be further back. Yeah, back here. Okay, so that blue dash line starts. Let's see. Do I like this area back here? Oh, yeah, I remember drawing these up. Okay. So, yeah, we're basically looking at this point in time here because we have a supply zone up here. Okay. This is a daily. So I don't know why I've got that. That actually should be colored yellow. Look at this daily supply. See, I've got the blue dash line actually on this swing high here, which is right before that overhead supply. So I would at least target that. It might be easier to see on a weekly chart. Good grief. Monthly? Yeah, here we go. Sorry, guys. I'm all over the place. So our overhead resistance starts all the way back here from 2013, guys. Just because it's a 13-year-old supply doesn't mean we ignore it. In fact, I'm gonna pull it forward. Okay, this is our daily supply. Can't ignore that. You just can't do it. Not when it comes to take profits and such. Got to keep our eyes on stuff. Anybody that tells you that supply and demand zones have a shelf life, guys, don't listen to them. At all, don't listen to them. because these things have a shelf life. Now, I won't be interested in shorting it, but as far as a take profit, I want to know about that because we will get some type of reaction. The only question is it going to be enough reaction to, go through the rest of it like that, or is it going to obviously turn around? We don't know that. But if I'm a long-term position trader, yeah, I want to know about that. In fact, right ahead of it, right above it a little further is an actual monthly supply zone. It's about as, it's about as nice as it gets. Monthly supply zone. We don't ignore things like that, no matter how old they may look, because you just never know when they might come into play. So anyway, get off on a tangent there. What else we got, ladies and gents? We got a couple minutes left. I'm going to get up out of here. Again, prep for my goodies, prep for my onboarding, comb my hair, look nice, all that fun stuff. Put on a decent shirt so I can look presentable. And yeah, as far as tomorrow goes, tomorrow's hump day. Yeah, so regular start time. I'll figure out my daily activities, guys, and I'll let you know tomorrow. But yeah, as far as I know, and as far as I assume, I should be able to maintain this same live time. Yeah, I'm just not quite sure yet. Perhaps I add in an afternoon session from time to time. I don't know. It just depends. So I'll find out all that, and I'll let you know how it looks tomorrow. Yeah, as far as my schedule goes. But yeah, just to kind of finish the day. Nothing much happening today. I know that's kind of what I said at the outset. Continued Aussie strength, continued British pound weakness. So automatically that puts pound Aussie at the very top of my list, since that's both the weakest and strongest currency. Okay, the dollar is close behind the Aussie. So pound dollar is right there. They're basically 1A and 1B. But I do like pound Aussie a little better, not only because it's the strongest currency, but because China has a pretty decently strong economy as well. And Australia is China's biggest trade partner. So when China does well, Australia gets an indirect boost. When China does poorly, well, then Australia tends to catch a cold. So right now, the reality is China's doing pretty good. If we go back to our surprise index for our currencies, China up here. See, China's right behind Australia, 71%. So basically 7 out of 10 high impact events for China are exceeding expectations. That's economic outperformance, and that helps indirectly boost Australia, right? So that's exactly why I personally like pound Aussie the best. We'll end it on that chart real quick, just to double check it. Yeah, just to finish on this. So we do have a supply zone up here, a little higher up. I've got my alert set. 189.84 is what I'm looking at. We're still a long ways away, about 150 pips or so. So it's just kind of hanging out here in no man's land, guys. Not really a trade right now. But, maybe by the end of the week, we get up closer to short this, or maybe next week. You just never know. But either way, guys, that's going to do it for me. I hope you have a wonderful day. I'll be on Trader Nick's stream at 10:15 Eastern Standard Time for my 30-minute segment, which is basically the break, if you will, between my two Zoom calls I have today for my onboarding. So with that, have a wonderful day, and I'll talk to you guys here in a little while.